Hello, this is Michael Salmony, and I wish to welcome you again to this video series where we're interviewing interesting people around the topic of open banking and open finance. And today we have another very interesting colleague who I'm very honored to be interviewing. This is Pinar Ozcan, who is professor at the Oxford Said Business School at the Entrepreneurship Center. And she's looked a lot at fintech around the academic side. So, Pinar, please tell us a little bit about what you found in this topic.
Of course, Michael, thank you so much for inviting me to this program. We have been doing research on open banking for several years now, I think already 6, 7 years, basically before it even came into implementation in the UK. And there are several things that we have found which we thought were interesting. The first phase that we have observed was that there was quite a bit of activity, especially around fintech, in being able to use data that was going to be available through open banking in order to innovate and bring new services and new insights and analytics to customers. And within that first phase, let's say first generation, we've seen a lot of use of AI. And in particular, the idea that we can use customer data in order to understand them better and therefore give them different products and services which are becoming cheaper, better, and faster because we are using their data to make them less risky.
That's a really interesting insight, Pina, because some people see open banking being mainly about payments, initiating payments, whereas you're saying the main focus of the fintechs you're seeing, or the main disruptions, are through the data and interpreting the data through AI. Is that right?
Absolutely. At least that's one of the big revolutions that open banking brings, because payment data, which is the data that open banking gives access to third parties, is in a sense a mirror of someone's life. So, and there's even talk about how if you have someone's Google searches as well as their payment data, you can basically understand what they care about and how they spend their time. Which means that by having access and being able to analyze payment data, gives third parties the ability to give better financial services, whether these are cheaper because they're less risky, or they're better because it is more tailored to their needs, or they're faster, such as being able to analyze someone's data and give them a loan or not give them a loan within a few seconds.
That's very good because I mean, that's reflected also in the number of licenses. There are many more
Yeah.
AISP licenses than PISP licenses, so it looks like everybody's really going for the data. But is the data really accessible? I mean, some people say the banks are holding on to their data and not actually letting go of it. What's your finding there, if I may ask?
Well, that certainly was the case, at least at the beginning. In that first phase that we observed, the banks very much viewed themselves either and on the losing end of this whole thing, or in a world where nothing was going to change. And so their response was along the lines of, okay, so this is something that I have to do as per regulation, but I will do whatever is needed, but not a step more. And so a lot of the original APIs that were published as per the regulator's request were either not functioning properly, or they were functioning but the data was not clean, which means that it was very difficult for fintechs to make sense out of this data. And so this continued for a while, and one of the consequences of that, which was quite detrimental for the innovation, was that when a customer gave a third party access to their data, and when there was a glitch and that third party couldn't analyze the data or couldn't get to it, to the customer, it very much looked like this was the fintech's problem, whereas it was the issue was really on the bank side. And so there was a time in which fintechs really struggled also because they don't have any reputation in the market. They're new players. It's already a market where trust threshold is quite high. You need to be a well-known player because you're dealing with people's money, people's assets. And so the fintechs really suffered in this period, and many of them actually went bust.
Do you
But
think?
then, of course, over time, things change. But I'll let you ask the question.
No, no. I mean, that's fascinating what you say because I recognize a lot of that even today, especially in Europe. I get the impression it's better in the UK. The quality of the access of the data is a lot better.
Yeah.
But would you say that problem has now been solved, especially in the UK, that there really aren't glitches in accessing the data, or Or are we still on a journey there?
Well, I think that we are getting there because the data is actually quite a bit more accessible, but not necessarily because the banks did a fantastic job. I think they've improved, and many banks, by the way, have started to change their viewpoint and started to view open banking as an opportunity for them to access other data. So this is one development. But another interesting development is that when there's a technical glitch, a technical bottleneck in a market, typically technology players, either new ones or existing ones from other industries, step up in order to solve it. And we saw exactly that in this market, where a new type of player called either aggregate, right, API aggregate, or we can call it a connection platform, appeared in order to make sure that these APIs were harmonized and that the data would start flowing. So they would build these platforms, connectivity platforms, where fintechs could plug in, and then once they showed that they had the license in order to, and the permission from the customer in order to get the specific data, that data was then given to them through the platform. And
Nice.
that itself is a very interesting concept because suddenly there's a new player and there's a new layer in between fintechs and banks. And then what becomes more interesting, at least from my point of view, is that once they solve this connectivity problem, of course, these platforms now have access to data, which means that they start to think strategically, what can be done with this data? And so rather than giving it to whoever had the permission, they started to reach out to other players who could use this in order to enhance their services, such as airlines, supermarkets, and other large players that could enhance their services through access to payment data. And so for us, one of the consequences of that was that it started to lower industry boundaries. And so someone who was in retail or someone who was in transportation, Uber, for example, suddenly could also have much more of a play in financial services.
That's super interesting. So what you're saying, if I understand you right, is there was this unexpected development that we got this new industry of these API aggregators and hubs, which
Mhm.
wasn't originally maybe the initial intention because all banks were supposed to have the same API and every fintech could access everybody. But because that didn't work, we got these aggregators. But they've now developed a whole new business model benefiting the banks and also even way beyond banks, right? So that's
Absolutely.
fascinating.
Yeah.
Yeah. We've almost
Yeah.
come to the end of our 10 minutes, but of course, there's a lot more we could say about that, how that goes to open finance or open, generally open.
Mhm.
And also, I love the idea that the topic you raised that this is actually for the advantage of the banks themselves, which is not every bank sees that. Could you maybe just say one sentence or two about that, how the sort of banks see that as an advantage and what new problems they're able to solve, which they weren't able to before?
Absolutely. So by understanding how the same customer that they might have is also consuming financial services in other organizations, they're able to not only compare themselves competitively, but they're also able to get a much more holistic view of the customers. And so we see quite a few banks around the world actually starting these hubs or starting these apps which allow you to aggregate your different accounts across banks. So it might be that it's offered by one bank, but through open banking, all data flows into the same app. And of course, to the provider of that app, this gives the advantage that suddenly there's much more data in, and that means that you could steal customers from others. And so, in a competitive landscape, it really improves their position.
That makes a lot of sense. So I think what I'm hearing is that instead of a bank just having you for one particular topic, like offering you a loan or your mortgage or your credit card, they
Mhm.
suddenly get a holistic view of where a customer banks at several banks maybe, and then can give the customer a complete offering all from the one bank, which is a huge opportunity for the banks doing that. Yeah.
Exactly. And so I think one of the reasons why this is important is that because financial services are being unbundled. So banks cannot assume anymore that you will stay with the same bank for everything. So that means that for every single service that they offer, they have to compete.
Wonderful. Pina, this has been most fascinating. I feel super tempted to carry on with you for another hour to drill into all the topics you've raised. That's been really fascinating. Thank you so much for your time and for letting us hear some of your insights from your research at Oxford.
My
And thank you
pleasure,
to all
Michael. Thank
those
you.
And thank you to all those who are watching this. And please check out the other videos from the key regulators, from the banks, and from the other players in this space. Thank you very much for watching, and thank you, Pinar, again.